Let's go to what y'all talked about, socks. Let's take these one. Yeah, we did this one last week, right? TFCO. Well, that's what we talked about actually. You know that when you get a multiple swing point breakout, that's the one case that you buy the breakout. So actually, let's start with like TFCO if they all look the same. So let's just grab one of them, and I actually threw them all into the watch list here, so I'll take that one. So last week we talked about this, and it was, it was back here back then. So the scenario last week when we chatted about it was that, you had a swing point breakout here on this bar. That corresponded with a breakout that was back here at the same time, same week. Maybe it was earlier in the week this one broke out. And when you get a multiple swing point breakout in a strong market, and as long as you don't have any resistance to the left-hand side, which you don't, right, because this is making new highs on all time frames, then that's the case that you want to buy on the breakout. Otherwise, you always want to wait on a retrace. And now if you're looking at it, and your two bars, this is the third week now, it's too late now. Right now is not the time to buy it on a breakout because the breakout happened 3 weeks back. The trade now is to wait on the retrace. You just have to. And to go back to the question of, okay, they're just going to the moon. Are they ever going to come back? Well, I don't know. This one got a bearish engulfing today. Maybe it's finally going to come back. But even if it's not, go ahead. Yep. It goes 2 to 3 bars, so you should expect this thing to stay strong. And so, parlay on what you just said, you definitely want to buy the retrace, right? Because you got the monthly supporting you, and so you may not get the retrace all the way to the swing point high. It more than likely they're going to jump it around 100. They're probably not going to bring it back to do a retest. They're going to get some sort of a retrace, and then they're going to try and jump it again. And so, these are the kinds of where they're very strong. They look like hell to try and buy them, but you try to get a little better of a purchase point, and you're banking on and then your time frame has to be long term, right? I mean, you have to be looking at least the weekly or the monthly, because if you're trading it over here, there's no obvious place to put a stop on it. So, you just got to go out to the longer term time frames and trade them. So, if all the other ones look the same, they're probably the exact same setups. Xilinx is another one. This one's been strong ever since it reported earnings back here. This was a multiple swing point breakout back at that time frame. That was back here, right? It broke them all out at the same time. It also was on the monthly as well. It was already extended. These guys are doing the FPGA chips, and that seems to be the hottest part of the chip sector right now. And yeah, you just have to buy these. And so, like we were just talking about that retrace, you see how this one never even came back deep and then took off again? That Tractor Supply may do the exact same sort of thing. So now, one thing you do have that's about to happen is you're starting to get somewhat, to the a little bit of an extension on the general markets, right, as you're going up to the new highs. That could end up being a retrace situation, or they break it out and just keep going. So, if you get some sector or general market weakness, right, that will help hold these back or bring these back. But if you don't, then it just doesn't matter, right? They just keep climbing. So let's look at this one that you're talking about, Matt. So socks. So what do we got? So this one I was asked about this actually in my professional side back when this was trading. It was about right here. And they asked me, because they wanted to buy some chip stocks in Europe. And they asked me back then, they said, what would it take to nullify the bearishness? And I told them a trade over this would be where you have to just start buying in. And the reason I picked that back then was because your bearish retest regen, let me do this right, it's right there, right, which corresponds with that guy. So if you got over that, and you did on this bar here on the breakout, If you got over that, then that probably gave you a pretty good indication that this thing was going to go up and attack these highs. And so it's already done all that now, right? And now it's kind of skywalking higher. You know, this whole sector to me is like really overdone. But at the same time, you know, you can't short it, and you're probably too late to buy it. Let me put this in here so you could get, I'm just extending it. We could get some more out of it, it looks like. What's that? Yeah, maybe I'm cutting in and out here. My bandwidth's not so good. Y'all still there? Okay. Y'all just kind of cutting in and out on me. I can't hear you very well. Okay. Yeah. Okay. well, since I'm recording on my end, then I'll pick it all up. I think you have to wait on some sort of retrace. You've got the same situation. You know, you got the breakout that's taking place this monthly, so that says this thing's probably going to stay strong for another couple months. So you got to find a spot. You know, you'd like to get a retrace back to the swing point highs. You may or may not get it. So that's each of those. What else y'all want to talk about? PSA, let's go see. Well, this is a very interesting setup because this one's set up pretty strong. If you look at it, you've got the setup where this swing point high, you know, it got tested, and let's see what the volume is. There's 3.9, and over here it got tested on 4.9, so it had volume. And if we look at the over here on the monthly, you got two swing point highs at 2.2, 2.32. Yeah, this thing could just blow out and head higher. This looks very bullish the way it's set up. Well, I don't know. I mean, you could actually take a position now because you got your retrace now, right? You know, not that you're probably going to get your full trade in by the end of the month, but I mean, the way this is set up, you know, if it holds these lows, which it looks like it probably will, you know, you could get a little bit, you know, if you're looking at, I would be looking at it on a weekly. So here's the case, right? You can hypothesize about what may happen. If I looked at it on the daily, you know, you could get some faster move to the downside if you break both swing point lows, right? So you could come back into this guy. And that would be, you know, and there's another swing point high here. So somewhere down in here you might get an entry, which is a great entry probably, 213. 213, if you go over here, is your swing point high retested all the way full retest regen, right? So you're getting kind of a low price entry on something that still, if it does turn on earnings, you know, has a good chance if it breaks this swing point high, which it already tested with more volume, then it's got a potential to break of two more swing point highs on the monthly. This is a good looking setup if in fact you can get, an entry down. If one is hungry, maybe they nibble at it here and then they try to take more there, or if you just try to be, judicious and wait, you try to catch it here before earnings. This is the kind that you could take a risk on, right? You got a good volume on these bars, into the swing point high. Something. Yeah, which is probably helping this thing go sideways to down, right? Yeah, so yeah, perfect. Yeah, I mean, if you're getting rotation, you got to assume the strength will come back, right? If this thing was so strong, and it was, I mean, this whole thing is nuts, right? If I pull up the XLRE, that thing went crazy. And that's a good point, Matt. I mean, that thing went stupid to the upside. And now it's coming back. A swing point high here. What is that guy? 34.14. Yeah, that would be the first test of that one. Yeah, I mean, if this pulls back a little bit more and the weakness is here, right? That's a nice place to be looking at it. Yeah. 65 here, sideways there, 25. Yeah, I think, honestly, I think, a setup, especially into these two bars, this is not a bad setup into these two bars if it comes into here, 213. Well, you can get blown away on earnings. I mean, this one's not going to move 15% on earnings like some of them, but, anytime you're going into earnings, you just got to assume that you potentially could take a hit. And if you're not willing to do that, you ought not be holding it. It's just the way it is, right? So if you're trying to trade this in front of earnings, that's probably not the right trade, because you really don't have anything unless it gets here tomorrow or the next day, and then you got a week before the earnings print. Then maybe you'll get a little pushback up into earnings. But tight stops to me don't help you, because the earnings happen. I don't know if these guys report in the morning or in the afternoon, but it usually doesn't matter, because they usually report before the market opens or they report after the market closes, and you're kind of like stuck. Either you're happy or you're sad. So, we'll take it the other way. Let's say earnings come out and this thing dips down, and let's say it's trading about right here when earnings hit, and it trades down. Are you going to want to buy a trade down to 208, 205? I'm not sure I would. Right? I mean, that's usually the way it works, right? It's like if you wait to get more information, sometimes you just wait too long. And I mean, I'm just saying, or you find another one, right? But if I looked at this stock and said if I wanted to do something, that's where I want to do it, right there. All right, that's the spot. Like everything else y'all listed here. Yeah, although this one's not bearish, right? But I understand what you're saying. But to me, this is that case. Remember, sometimes I used to talk about momentary weakness, right? Where your trend is strong here. Now, this one is a little bit different, where the trend isn't strong here yet. It's not until it breaks these swing point highs. But the momentary weakness case is where you've had a strong trend on the longer-term time frames, and on the short-term time frame, you get some sort of a retrace. That retrace is kind of momentary weakness before it takes off again. Now, whether this does it or not is a different question, but I mean, that's the concept, right? I even have a scan in the TradingView scanner to look for these things.